Earthquakes? Pandemics? And climate change? I get that wars and elections can shake up the Forex market, but what about natural disasters like earthquakes, pandemics, and climate change? Oh, those really move currencies too. These events might seem non-economic at first glance, but they can hit currencies hard. They affect economies, investor confidence, and even central bank actions. And in the Forex world, perception and sentiment move mountains. Let's start with earthquakes. What happens to a country's currency when a major quake hits? Earthquakes are sudden, destructive, and costly. The first impact is a shock to confidence. When a severe quake strikes a nation, traders often sell that country's currency right away, not necessarily because of the physical damage, but because of uncertainty. So people just dump the currency because of fear. Precisely. Think of Japan, which faces earthquakes regularly. When a major one hits, the yen might wobble at first. But here's the twist. Sometimes the yen actually strengthens afterward. Why? Because of repatriation. Repatriation? Imagine Japanese insurers and investors who have assets abroad. After a natural disaster, they may need to bring money home to pay for rebuilding. That creates demand for the yen. So even though the quake is damaging, the currency gets stronger due to capital inflows. That's counterintuitive. It is, but welcome to Forex. It's a game of expectations, flows, and logic flipped on its head sometimes. What about pandemics? COVID-19 changed everything, right? Huge lesson in that one. Pandemics are prolonged shocks. When COVID hit, it triggered panic, lockdowns, and global recession fears. Initially, there was a scramble for USD, the world's ultimate safe haven, so the dollar surged. Yep, it was the global dash for cash. But then came massive central bank stimulus, rate cuts, bond buying, fiscal bailouts, that shifted things. Traders moved from fear to recovery mode, and currencies like the AUD and NZD, tied to commodities and growth, rebounded. So pandemic reactions evolved over time? Exactly. First phase, fear and flight to safety. Second phase, stimulus and search for yield. Third phase, who manages the recovery better? Forex trading during pandemics is all about policy response, health data, and economic adaptation. And climate change? Isn't that more of a long-term thing? You're right, climate change is a slow burn, but it's starting to have real Forex implications. Think about climate-driven disasters, floods, wildfires, droughts. They disrupt agriculture, insurance, energy, and infrastructure. So if a country faces recurring climate disasters, investors might avoid its currency. Absolutely. Plus, countries that lead in climate adaptation, like transitioning to clean energy, may attract long-term capital. That's good for their currency. It's a new frontier in macro FX. How do traders position for this? By watching resilience indicators, look at disaster response speed, fiscal strength, central bank flexibility, and even green bond issuance. These all tell you how vulnerable or adaptive a country is. Give me a checklist. How do I evaluate a natural event's impact on currency? Severity and scale? Is it a localized event or a nationwide disruption? Economic exposure. Does it hit critical industries? Policy response, or central banks or governments stepping in with support? Market sentiment. Is fear driving flows to safe havens like USD, JPY, or CHF? Repatriation flows. Will local investors pull assets back home? Out. Recovery outlook. Are markets optimistic or pessimistic about bouncing back? So in the end, it's not the disaster itself, but the economic story that follows. Nailed it. Disasters are catalysts. The narrative and capital movement that come next are what drive currencies. I never thought an earthquake or a virus could shift billions in Forex. They can, and they do. That's why traders must stay macro-aware. Nature doesn't care about market hours, but the market always reacts. Thanks, Moneymaker. You've opened my eyes to a whole new level of risk and opportunity. That's the goal. Always remember. In FX, the unexpected is the only constant. Watch the skies, the seas, the labs, and the charts. They're all connected.